Hello everyone, I'm Kate Hill and welcome to this edition of the Adviseable Advantage Property News Update. Before we get started, please subscribe to our YouTube channel and hit that notification bell so that you don't miss out on further news updates, on our suburb analysis reports and free webinars. Don't forget that we at Adviseable are out there every day, 24/7, looking at property, buying property. We are at the coalface and we are here to help you. So please get in touch with us if you've got any questions at all about your property buying. And let's get going. As an overview of today's program, I will cover off on the current situation in the Melbourne property market, an overview of price growth generally, vacancy rates in inner Sydney and inner Melbourne, a finance update and how the lenders are assessing your loan application. You can jump to each particular segment that you're interested in if you don't want to watch the whole program. There's been a general sense of relief that the Australian government are continuing their support packages of JobKeeper and JobSeeker beyond the September deadline. Although businesses will need to re-qualify to access this support, there has been a collective breathing out that these support packages haven't just been cut off. Economically, we are a very strong country, and I think we can be thankful that these support packages are available to us and that we are receiving this support. Given the current COVID lockdown situation in Melbourne, the Real Estate Institute of Victoria President Leah Calnan has told investors that the stability in the market will provide more confidence going forward. She said that the market has been very consistent and that this is a positive aspect for everyone. She also comments that while current investors and owners are winners with these stable house prices, those looking to get into the market right now might be the losers because there aren't really any bargains out there. We aren't going to see those 30 to 40% property reductions that we were predicted. With a lack of bargains available, Ms. Calnan noted that if property ownership is more achievable, then potential homeowners should buy now instead of waiting. The data continues to show us that the property market in Victoria is strong and consistent. Ms. Calnan also said that there are some trends with investors moving out as some company offices have changed over the last few years, and with COVID likely to accelerate this change. Earlier in the year, they were receiving reports from agents that people in the Melbourne area were looking for regional properties. In some other market news from around the country, some of the smaller Australian capital cities and many of our regional property markets continue to experience strong sales activity. Adelaide and Perth have both handled the pandemic better than most parts of Australia, and their property markets are delivering pockets of growth. According to property researcher and commentator Terry Ryder, Adelaide continues to thrive unnoticed. According to Terry, the biggest story is the strength in these regional markets. Many parts of regional Queensland are strong growth markets, while the regional areas of Victoria, Tasmania and South Australia are all delivering price growth in defiance of the pandemic. Now, most of us know that South Australia will never feature in the major media, but many of its property markets continue to produce double-digit annual growth in house prices. The property markets in parts of Sydney and Melbourne are struggling. There's a confirmed downturn in Melbourne sales activity in the wake of COVID-19. There are fewer sellers and also fewer buyers, and prices are stable. Some parts of Sydney and regional New South Wales are the markets which have taken the biggest hit from the pandemic. While some of the smaller capital cities and regional markets have continued to do well, there has been a quite sharp decline in prospects for the nation's biggest city and many of the regional centres of New South Wales. Both Sydney and regional New South Wales were generally rising strongly prior to the onset of the COVID-19 pandemic, but sales activity has turned down. We would consider some Sydney markets to be real no-go zones at the moment. And these are all the typical apartment precincts where supply is high, demand is weak, and it's at a time of sharply increasing vacancies, notably in the Sydney City and Parramatta LGAs. More on this a little bit later. The latest ANZ CoreLogic Housing Affordability Report has shown that inner Melbourne recorded a 57% increase in advertised rental properties, while Sydney's city and inner south both record a 53% jump. All other capital cities saw a drop in total rental listings. ANZ economist Felicity Emmett agrees with our previous assessment of these numbers and has said that the fall in demand for rental properties in inner Melbourne and Sydney was due to their service economies, which have been extremely negatively impacted by these government shutdowns. Nearly 40% of people who work in the accommodation and food services sectors rent. And she added that between March 14th and June 27th, 21% of hospitality workers lost their jobs, compared to an average of 6% across all other industries. She also highlighted how changes to overseas migration has seen a drop in demand, as approximately 80% of newly arrived migrants rent their accommodation. She says that this drop-off in demand will impact regions popular with migrants, including inner city and southeastern Melbourne and inner and southwest Sydney. The oversupply of inner city properties has reduced rental values by as much as 7% in suburbs such as Sydney CBD, Haymarket and Barangaroo, and South Bank in Melbourne. Please note, everyone, that this oversupply of rental stock since March has been largely confined to these inner city areas in Melbourne and Sydney, as we've just listed, because all other capital cities have experienced a decline in vacancies. There are still great opportunities for investors where rental markets have continued to tighten and rental values have increased. In finance, generally lenders are asking for the most recent documentation from you. It was often the case, and certainly with self-employed people, that you only had to show previous financial year statements, for example. Whereas now, many lenders want to see up-to-the-minute trading statements from you. They will carefully scrutinise your financials and the industry that you're working in to assess the risk that you pose to them. They will look at your sector of employment, and if you're working in tourism or hospitality, for example, then they will look at you very harshly, particularly if you're self-employed. Not all lenders will accept JobKeeper. Note that the banks can also see what they call all open credit, so all existing credit cards, whether you're using them or not. They are trawling through your statements for any zip pay, afterpay, online betting accounts, anything that could be of interest to them. You may also find that they're asking for an extra payslip even after you've received your finance approval and before your settlement. And this is just to make sure that you are still working. So be ready to talk to your broker about these documents that you need to have ready, and keep having them ready for the lender if you're buying property at the moment. Unfortunately, that is just life and there's no way around it. All brokers that we know are saying that they are busier than ever. There's a lot of activity out there in the market, and the secret at the moment is to apply with the right lender. If you're in a hurry and you're buying a property, you can't wait a month to get approved. You don't want to wait that month to get your pre-approval either. So talk to your broker about other and faster options out there. Please also watch our most recent finance video series where we discuss exactly this and what you can do if you feel like you're waiting too long for your lender to approve your loan. When it comes to foreign buyers, there's actually been an increase in the number of overseas buyers. Up until now, Australia has done exceptionally well at managing the COVID pandemic. And so we are seen as a safe financial haven, a safe economy, and a safe property market. We expect this trend to continue as there are more loans available to overseas buyers, and they are cheaper than they have been previously. Please subscribe to our channel so that you don't miss out on our area reports, our webinars, and our further news updates. Leave us a comment below and let us know if you have any questions at all or any concerns about your property buying. And please check out our website for more details on our services, and how our advisors and buyers agents can help you. And I look forward to seeing you soon. Bye.